Good afternoon, ladies and gentlemen, and welcome to the introduction to Hostelworld Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when these are ready for your review. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Gary Morrison. Good afternoon, sir.
Thank you very much for the introduction and welcome everyone. It's wonderful to have the opportunity to be able to talk about our exciting company for the next 20-25 minutes and look forward to taking your questions. So if we start with a little bit about who's presenting today. So obviously I'm Gary Morrison, Chief Executive Officer of Hostelworld Group. I joined in late 2018 and I'm joined by Caroline Sherry, our Chief Financial Officer. So I thought I'd start just, talking a little bit about who we are and what we do at a very basic level of detail. So we are a online travel agent focused on the hosteling category. And the business was launched about 22 years ago. And in that time, we've built up 13.7 million reviews from other hostel travelers and a very loyal customer base that we'll talk a little bit about. We have about 17,000 hostels on our platform across 180 countries, as you can see on the right-hand side. And we serve those 180 countries, and we serve our customers across a combination of three platforms: a website, an iOS native app, and an Android app. And all three of those are available in 19 languages. And just to give you a better data point about how big we were in 2019, our gross merchandising value or gross marketplace value in 2019 was about 546 million. And that was across about 2.5 million unique customers in 2019. Today, we have about 230 employees, mostly located in Dublin, some in London, some in Porto, some in Australia, some in Shanghai. And now to talk a little bit about what we do. So we essentially are a two-sided marketplace focused on the hosteling industry. So we provide a platform for hostel owners to list their inventory, their dorms, their private rooms with either flexible rate plans, non-refundable rate plans, promotional configurations. And on the demand side, we provide hostelers with a trusted platform, very important, to book hostels and crucially to find people to hang out with while traveling. And we'll talk a little bit about that as part of our growth strategy. But in terms of the trust, it's good to note that our Trustpilot score is 4.7 out of 5, which will be rated as excellent. We have incredibly high App Store and Play Store ratings for our mobile app. And the way that we make money is we charge hostels a commission when consumers book on our platform. And we collect that commission directly from consumers in the form of a booking deposit. So that's essentially our business model. And now I'll talk to you a little bit about our growth strategy and how this is really, really differentiated. And indeed, it really focuses on what are the unique needs of the hosteling category relative to the rest of the online travel aspect. So if you sort of look at it in terms of three distinct differences versus mainstream OTAs. So the first one is, what's the primary or prevalent customer need? So if you look at mainstream OTA, generally the need is help me find and book a hotel, which is really a convenient place to stay while I'm traveling. That's very different from hosteling as a category. When people are looking to find and book a hostel as a means to meet other people. And that's really crucial when you think about 60% of our travelers are traveling solo, not because they they're antisocial people, but the expectation is that you will meet people by traveling, and by staying in a hostel, that's the primary means by which you do so. And in terms of our strategy and how we seek to capitalize on that point, we built a series of differentiated features in our app that help hostlers find people to hang out with. The next big difference between mainstream OTA and hosteling is really the booking patterns. And if you look at mainstream OTA, and I would know this having run the Expedia branded businesses for 7 years in my prior life before I joined Hostelworld, the majority of customers there go on a single destination trip, and about 85% of those would book once a year or less frequently. Now, this is very different from the hosteling category, where we see our customers go on multiple destination trips. So I might start and leave from London and go to Bangkok, go to several destinations around Asia, and then come home. And then I will come back as gap year or mid year semester or post gap year travel. So, from a strategy perspective, what we're able to do is to use our own data to be able to seek out, find, and recruit those high lifetime value customers in a very data science, data driven way. And once we bring those into our platform, we then switch them over to the app where they can then use those social features to help them to find people to hang out with. And I think the third piece, which is remarkably different about mainstream OTA, is in general, on the mainstream OTA side, if people are buying hotels, they may also be buying car rentals or flights or look for sightseeing trips. Whereas in the hosteling context, again, it's very different. People are looking for other, crucially, group based experiences as a means to meet other people. So, for example, opportunities to go volunteering together, or to do short adventure tours, or to find opportunities to be able to work in, um, let's say, a surfing resort where I can teach people to surf and I get my board and lodging for free. So, very different types of experiences. So, the last strand of our strategy, of course, is to broaden out the product portfolio, not just helping our hostlers with hostels, but also thinking about what are the other group based experiences that we can bring onto their platform that we can cross sell, and therefore driving up revenue. So, moving on, I talked about those social features, which is a big pillar of our strategy. And earlier this year, we launched what I would call the basic infrastructure to support the evolution of the social features as we go through this year and into next year. And it's really composed of four different components. The first is user profiles. Today, we just basically have user profiles which look at how many countries you've been to, which properties you've been to, what nationality you are. In the future, we will start building that out to say whether you're a solo traveler, what kind of interests you have across all of our experiences, whether it's hostels or indeed link ups, which I'll talk about a second, and other group based travel. We'll be able to show you who else is going. So as you're researching your dates and trying to pick which is the right hostel for you, you'll be able to see who else is going to be staying there on your stay dates, which gives you a much better idea if this hostel is going to have people that you want to hang out with. Once you've booked 14 days before your travel date, we start offering you a range of what I call interest-based chats at both the hostel level and the city level. And we do that to help you find people who've got common interests to you so you can start arranging to meet them. It might be for a coffee, it might be for a pub crawl, it might be for whatever it is. And we're going to extend that later on this quarter with a product called Link Ups, which essentially help you find an event. For example, if I am traveling around Amsterdam and I see that Joe's Bar has got a great happy hour every Thursday, I might want to set up an event to tell other people who are going to be at Amsterdam, no matter what hostel they're staying in, go to Joe's Bar on Thursday at 7 o'clock. And again, you'll be able to see who else is going. So all of these social features were launched on iOS, I'm going to say early April. We've just ramped up Android to 100% in the last couple of days. These are very much version 1 type features that we will be iterating on. And again, with the sole goal of helping you to find people while you're traveling. So I'm going to pass over to Caroline, and I think somebody may have their mic on.
Hi, it's me, Gary, in readiness to take over. Thank you for that. My name is Caroline Cherry. I'm the CFO at Hostelworld, and I'm delighted to be here today to talk to you about our business. I'm going to cover off our business the past year that was FY21, and also what we've seen in our trading performance year to date in financial year 2022. So we're going to focus on our cost base initially, and as you can see, our cost base is greatly reduced 2021 versus where it was in 2019. And 2019 is a very important year for us because that's the comparable year of what we would call a normal trading environment. And we took out 7 million of cost from the business across all of our operating cost lines. A big part of that was actions we took on our wages and salaries. So as Gary mentioned, we're a team of about 230 people. That was 330 in March 2020, just at the start of the pandemic. So the pandemic made us react in ways across all of our operating cost lines to be incredibly prudent and to conserve our cash as much as possible. We went through a reorg, an organisational redesign, which allowed us to cut the teams into autonomous growth teams that had cross-functional representation from our marketing, product and development teams, as well as our AI teams. And these autonomous teams are the teams that now run our growth channels. And in doing so, it allowed us to greatly reduce our wages and salaries, taking out 20% versus what the cost had been the previous year. We have reinstated some of those costs back into the business. We have reinvested in key areas of critical tech product projects, such as platform modernization and a full migration to cloud-based services. So we are in the process of this project, which will fully replace our legacy backend platform. And this in turn will allow for much faster execution and for far more sustainable hosting with Google Cloud. We've cut discretionary spend across all of our lines. We renegotiated all of our contract services, and these helped to deliver the 7 million cost saving. Now, going forward into the next slide, looking at our balance sheet, conserving cash was obviously a key theme for us throughout 2020 and 2021. And the net result of the actions that we took on the previous slide resulted in a full year 21 average monthly operating cash burn of about 1.3 million. And that's an FY21 number. Obviously, our cash position has changed in FY 2022 off the back of improving trading performance, which I'll cover off in the next couple of slides. So focusing again maybe on FY21, we entered the year with a strong cash balance and we were debt-free at the time, save for a 1.2 million short-term invoice financing facility that we had drawn down with AIB, an Irish bank. And in reaction to the COVID crisis and its continuation into financial year FY21, we raised 30 million of debt in February. And this was really necessary liquidity to supplement the business through what we knew was going to be another prolonged period of depressed demand with successive waves of COVID, continuous outbreaks, and the reintroduction of travel restrictions. Again, last year, a lot of countries were just dealing with mass vaccination programs, and we really didn't see the benefit of all of that hard work until the middle of last year. But back to the balance sheet, the debt that we raised combined with our conservative cash management meant that we closed the year with a cash balance of 25.3 million and a net debt position of 2.9, which is the sum of the 28.2 million debt that we raised during the year and the 25.3 million cash balance. All of the debt interest in the first year that we drew down in FY21 was capitalised, and this month just gone, May 2022, was the first time that we had a cash outlay associated with the debt. So now looking at our actual trading performance, so if we look at our net revenue, bookings and margin performance week by week. So this slide shows the weekly performance. From the very left, week 1 is the first week of January in 2021, right through to week 18, which is week 18 of 2022, and that brings us to the first week of May. To note, as I said earlier, we look at the weekly performance as compared to the equivalent week in 2019, as this is a pre-COVID comparable and a true trading performance environment. So as you can see from the graph, we saw consistent growth in revenue and in net bookings throughout 2021, with an acceleration of this recovery in 2022. And it's evident from the profile of the recovery that there is significant pent-up demand for travel, and that this demand is being released and consumer confidence levels are rising. Net bookings and net revenue recovery trajectory have closely followed each other. Net revenue recovery has outpaced that of bookings, and particularly so from the second half of 2021 onwards. And that really is driven by 3 main factors. One is geo mix, where we have a higher proportion of bookings coming from geographies with higher average bed prices, such as North America and Europe, versus 2019. The pent-up consumer demand means that customers are booking longer length trips. So in 2021, 36% of bookings were for greater than 5 nights, and that compares to 28% back in 2019. So what we're seeing is when consumers can travel, they're traveling for longer. And also with the stabilisation of travel, hostels are now able to normalise their bed prices. So in the very depths of COVID, hostels were having to greatly reduce their bed prices to be able to attract customers. Now we're seeing that actually hostels can raise their prices back to more normalised levels. And in most geographies, these bed prices have actually surpassed the average bed price for their area back in 2019. As you can see from the graph, we did see a decline in bookings in the last 6 weeks of 2021. And this was really the impact of the 4th wave of COVID in Europe and the emergence of the Omicron variant. And as you can recall, the Omicron variant resulted in the reintroduction of restrictions and really just impacted booking demand. And we also had an increase in cancellations, given that customers now were either unable to travel or restrictions meant that they were going to have to quarantine for longer. But looking forward and looking over the past 18 weeks of 2022, we can see a very, very strong recovery in all of our trading metrics and the strongest performance that we've seen since the very start of the pandemic. And this pattern of consistent weekly recovery is continuing. We continue to see strong ABV, bed prices are holding up, cancellations are reduced, favourable geo mix and length of stay are all trends that we're continuing to see in 2022. In particular, we've seen direct margin rebound in 2022 and now follow the same trajectory as that of bookings and revenue. And really, this is the benefit of travel restrictions easing, consumer confidence returning, and an increase in conversion as travel patterns normalise. And overall, what we would say is that our investment philosophy will remain unchanged. And this investment philosophy is to maximise new customer growth rates at acceptable levels of new customer profit. And this would see us probably operating with marketing as a percentage of revenue at around 55%. So now I'm going to look at this recovery profile on a regional basis. So what we say here really is that net booking growth mirrors changes in individual markets based on restrictions. So restrictions opening, we see the demand bounce back and that pent-up demand really coming to a fore. So where travel restrictions ease, demand recovers quickly. In 2021, we started to see strong recovery in Central America with pockets of recovery in US domestic demand. And as we progressed throughout the summer season, we could see that EU demand was returning, and this was off the back of the introduction of the EU digital COVID cert. So again, reopening of borders meant that we saw a pickup in demand, and particularly in southern European countries. And some of these destinations have now far surpassed their 2019 levels, particularly in 2022 so far this year. The second half of last year, we saw the continuation of the recovery of Europe, and then Central America stormed ahead. So Central America was actually double what it had been in 2019. And that momentum was continuing at pace, again, until the last 6 weeks of the year, where the Omicron variant came to a fore. And outside of these main geographies, Asia and Oceania, where restrictions were still very much in place, demand was muted. Again, moving into 2022, we see big uptick across many geographies, particularly in Europe, which is a key area for us. So Europe was our largest destination in 2019, and this now has almost fully recovered back to 2019 levels, again with some key destinations well ahead of their 2019 mark. And as I said, Central America has just continued to storm ahead, and at some point it will surpass that 200% mark. Finally, just one more cut of our customer cohorts, just looking at the profile of recovery across domestic, short haul and long haul. And just as a reminder, a domestic trip is where a traveller is located in the same country as the destination of the booking. Short haul is when a traveller is in the same region as the destination of the booking, but not the same country. And then long haul is a booking whereby the traveller is in a different region. So as you can see, the recovery in FY21 started domestically, driven by the US and Australia, with some long haul into Central America. Then as we moved through the summer months of 2021, Southern Europe started to rebound with the opening of borders. They experienced fairly good summer months, and that was the stimulus for recovery in the short haul travel sector. And then as borders continued to open up in the latter part of 21 and into 22, we are seeing resumption of all travel types. And most importantly for us, long haul bookings, whilst the slowest to recover initially, has now surpassed that of domestic. And at week 18, very pleasingly for us, long haul has reached 70% of 2019 volumes, with trips from the US and Canada into Europe, a key demographic for us, now having fully recovered to 2019 levels. And with that, I'll hand you back to Gary.
Thanks, Caroline. So we've talked about three things over the last 10, 15 minutes. One is I started talking a little bit about the business model and what was really highly differentiated about the growth strategy. And then Caroline talked to you a little bit about the tight cost control and where the balance sheet is, and also giving you a bit of a flavor of how the travel is recovering. So what I want you to do is just to give you a little bit of flavor about what the shape of the P&L is looking like and what the trajectory of it is looking like versus FY 2019. So from a GMV perspective, clearly, as Caroline said, we have net bed prices are on the rise, pretty good inflation in many destinations, but also from a business model perspective, we are actively targeting those high lifetime value customers, those customers who are going on the longer multiple destination trips and who, in a very statistical manner, we believe will come back year after year. From a net revenue perspective, our commission rate actually is slightly down on 2019 levels. It was about 16.6% on average. Now it's about 15%. It's probably market leading commission rates in the sector. Obviously provides our hostel partners with even more reason to provide us the most compelling and competitive inventory on our platform. In terms of direct marketing, our business model strategy is we simply, in a very statistical, targeted manner, look for those highest lifetime value customers. Then we optimize what we pay from a customer acquisition cost perspective to maximize new customer growth. So that's how we really try and drive the paid marketing spend in a very data-driven manner. But of course, then that's partially offset by the growing app install base because we are meeting an unmet need, which is helping me find people to hang out with. So overall, if you take net revenue and you subtract your direct marketing and you get to direct margin, we still expect with that overall business model to drive very strong direct margin growth in the future quarters. Caroline's talked about the fact that we've reduced our OPEX by about 25% versus 2019. So obviously that gives us more operating leverage in a world where direct margin growth is growing. That then feeds down to EBITDA. And historically and going forward, this has always been a business that has very, very high cash conversion. So that sort of gives you a bit of a feel for what the direction of travel for the P&L will look like as we look at the quarters to come. So what are we focused on for the balance of this year? Well, we're continuing to invest in our core business in terms of the marketing capabilities that allow us to be able to drive that very data-driven marketing allocation, optimizing new customer growth, predicted customer lifetime value, customer acquisition cost, always looking at user experience enhancements to make our website go faster, make it easier to shop and book with us, growing inventory competitiveness, and also the platform modernization, given that the original platform is more than 22 years old. We're going to continue on iterating on those social features. We have the base level infrastructure in place. We will continue to experiment with what kind of profiles to show people what kind of information to be able to see who else is going, the most rich and valuable for people. Continue to invest in those interest-based chats to encourage people to ask questions, to meet up, and then, of course, the link-ups, which we will expand from consumer events to allowing our hostel partners to be able to load their own events, and eventually thinking about third-party events that we might want to run in a city. In tandem, we're also looking at broadening out that group experience travel catalog. We launched Romies, which is a very long-term relationship with GN Ventures back in December 21. That fuses together the hosteling accommodation type with group adventure travel during the day. We sell that on our own site. GN Ventures sells it on its site, but they also sell it through a network of 60,000 offline travel agents. So the first departure dates were in May. It won't be a material contributor, given it's a fairly narrow product portfolio for this year. Won't be a material contributor this year, but we do expect it to have a contribution as we grow the product portfolio and really start marketing that product as we get into 2023. And finally, as you might imagine, as a business that's dealing with 80% of our customers are 18 to 35, sustainability is very much uppermost on their minds. We have been working in partnership with the South Pole towards climate neutral accreditation. And we've already paid for offsets that offset all of our carbon emissions as a company from last year. And I think as we go forward, we'll be exploring different ways to be able to show to our hosteling customers which hostels are more green and how they are green relative to others. So just to sort of close a little bit, we have over 22 years, we've built up an incredible brand recognition across our hostelers and hostel owners. The business is very asset light and historically, and it will continue to be highly cash generative. We have a highly differentiated growth strategy in place, which really focuses and capitalizes on the unique needs of our category, the hosteling category. We believe that's going to help grow revenues and margins. And certainly, if you look at the first 18 weeks of the year, now the travel restrictions are starting to ease, you can see there's a very nice pattern of acceleration there. So, as I said, very encouraging start to 2022. Obviously, we are continue to be highly geared towards the travel recovery. And as I said, we've started the journey of working with third parties around sustainability. You should expect to see more of us, more about our sustainability plans as we get into 2023. So with that, I did want to advise you some key upcoming dates. So the next trading update we will give on July 12th, which will be a trading update in the form of an RNS for our first half. We then have interim results will be on August 10th, and we plan on having Capital Markets Day, Investor Day in Q4 of this year. So with that, we have some financial information, which I don't think we're going to go through. I think we're just going to allow people to look at the presentation, which will also be loaded up on our website. And I will now pass it back to the investor meet company.
Gary, Caroline, perfect. Thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Caroline, Gary, as you can see, we have received a number of both pre-submitted questions that were submitted ahead of today's event, as well as a number of questions that have come in throughout today's presentation itself. Firstly, can I thank all the investors for submitting their questions? And David, if I could please just hand back to you to run through that Q&A tab, and where appropriate to do so, if you could just please read out the questions and give your response, and then I'll pick up from you at the end. Thank you.
Thank you. David.
Thank you, and good afternoon, ladies and gentlemen. I'm David Brady. I'm the head of commercial finance with responsibility for investor relations at Hostelworld. Thank you very much for your questions. We'll take the opportunity now to put those questions to Gary and Caroline. Guys, the first question is around selling experiences, and it's a question around city walking tours, culinary experiences, etc. How do we selling experiences like that to hostel bed bookers seems like an easy cross-sell win in a way to take more traveller wallet share over time, given the ticket time value for this versus dorm beds. Is this something that we have planned for 2022-23? If so, are we concerned that our hostel partners might see this as competition to their aspirations to secure a wallet share from their guests? How do we think about this in terms of its threat to the core franchise if we were to pursue this?
So, great question. Thank you, Jake. And the answer goes something as follows. So, in the presentation, I talked about link-ups. So, link-ups is the first event-based product where I, as a user, as a traveler, can set up an event which would be visible not only to the hostelers who are staying at a hostel, but also to all of the hostelers in the city, in Amsterdam, in Seville, in Berlin, wherever you happen to be. The next iteration of that product, which is planned, and we should execute before the end of the year, is to open up that platform back to our hostel partners. Many hostels use events as a means of generating ancillary revenues. Typically, a hostel makes very little money off the sales of beds, and they make far more money off the sale of food, beverage, and crucially, events. So in that context, historically, we've always done a fantastic job of providing customers who really understand the hosteling experience and consume the food and beverage and events. So providing the most profitable customers to our hostel partners. And what we'd like to do now is to open up that link-ups product to allow hostels themselves to be able to load up their events, not only for people in the hostel, but indeed for all of the people in the city. I think the third iteration of that product will be to say, is there a market for us to work with third parties to set up, I'm going to say, a monthly concert over summer in Amsterdam? You know, we have several thousand people a day on average in Amsterdam, 365 days a year in 2019. So we've more than enough volume to be able to support a catalogue of events over and above what hostel partners would offer themselves. But certainly the first iteration after the user-generated events will be to open that platform up to our hostel partners, therefore driving even more revenue and business for them. That's back to David.
Yeah, thank you, Gary. The next question is around capital structure, and the question is along the lines of the expectation that we will turn a free cash flow positive in the second half of this year. And can we give a sense around what we believe to be the correct capital structure for the group moving forward, given that the business was traditionally run with little to no debt and now finds itself with debt levels, the HBS loan and the Irish Tax Authority as well, approximated to 2 times of our historic free cash flow. Is a refinancing of the loan something that we might look at in the coming years?
I can take this one. Thanks, David. So there's a couple of things mentioned in that question. It's a great question. In terms of being cash flow positive, look, what I'll say is that the things that we mentioned in the presentation around, we have significantly increased our operating leverage. So we have reduced our cost base. We took 7 million cost out. There's some big numbers in terms of percentage reduction. That helps. Also, in terms of our investment strategy and the type of strategic bidding we're doing, which means we attract very valuable customers, helps with our trading margin. So we've taken data science bidding models that help attract a very valuable customer, helps with our margin, reduced operating leverage, helps with our cash position. And as Gary has said at the end, we have always been a very cash generative business. So they're all, I think, very positive lead indicators, and that operating model has not changed post-COVID. What I will say about the debt piece, and the Irish Tax Authority is mentioned, for those that may not be aware, we have warehoused our payroll taxes with the Irish Revenue, and this was a facility that the Irish Revenue offered businesses that have been impacted by COVID. That liability is sitting on our balance sheet. It is a non-current liability. It doesn't fall due for payment within the next 12 months. There's also zero interest being earned on it. From April 2023 onwards, interest will fall due on it at 3%. So it is a very, very low interest rate. In terms of the HPS loan, yes, the debt facility was of its time, and it was the right thing to do at a time when there was very little certainty in the marketplace in terms of when business could return, the level of bookings that we would see, and when would we see the recovery. So if the travel recovery continues as we have seen it, and as we can have demonstrated in the slides, when it recovers very fast, the rebound is very, very strong. We feel very positive about the business. That will give us options. We'll close out this year, and it will give us options as we look into next year. Our main overriding driver always has been and always will be, what is the best interest of shareholder, and how do we maximize shareholder value? And that will be at the focal point of any decisions we make around the balance sheet.
David.
Yeah, thank you, Caroline. Moving on, we've got a question here about our social chat features, and really the question is wondering that as it's a feature which is in its infancy now, are we experiencing any let's call it tumbleweed problems where guests enter a relatively empty chat room with limited activity? Do we have any insight or stats that we can share at this stage, and any plans that we have to develop the product to boost this activity over time?
Okay, another really great question. So first off, as I mentioned earlier, the social platform is very much in its infancy, V0.1. So a couple of things. One, we only launched the platform on iOS in early April, and then we launched the platform on Android actually a couple of days ago, sort of ramping it from 0 to 25 to 100%. What is very, very evident is even only having the platform on iOS, which, as you might remember, if you've got 50% of customers using iOS in a city like Amsterdam and 50% using Android, that means only 50% can see it. So by adding Android onto it, we're creating a lot more network density. And what we are already seeing with a very basic set of features is that as soon as the density rises, the volume of chats are growing disproportionately. So we're seeing that network effect. I think the other thing that we're seeing, which is really interesting, is all the people who book very frequently on our platform, let's call them power users, are using the features. Now, what I can't say yet is the features are creating new power users. But as we start introducing richer profiles, nudge, feedback loops, badges, all of the things that you would see on some of the social networks like either a Foursquare or so on and so forth, we do expect the utility and the usage of that platform to start rising exponentially. That in turn will obviously give people a reason to come direct to us and to stay with us. So that really enhances the business model that I spoke about earlier in the presentation and its effect on the P&L later in the presentation. So I'll hand it back to David.
Thank you, Gary. We have a question here as well regarding the concept of loyalty and reward programs. Is this something that we would consider to try to drive stickiness and encourage repeat bookings and retention, or does the structure of our business with a lower average booking value mean that we look at this a different way?
Yeah, so I have a lot of experience in this, having run Expedia's rewards program way back when. So the first thing I would say is when you think about rewards program, you need to think about what are you trying to incentivize. We actually have a rewards program, but we don't call it a rewards program, and it's called app-only discounts. And put simply, we secure promotional rates from our hostel partners that are only available in our app. And that's exactly where we want them, because obviously app has a much lower direct marketing cost, virtually zero. It's only the cost of the incremental install, if indeed we've paid for it. But not only is that where we want people to book, but it's also where we show people the social features. So it's encouraging people to use the app. So although it may not be classed as a rewards program in the classic sense, it's very much a strong incentive program paid for by our hosteling partners to incentivize people to use the app. That would be the first point. I think the second point, when you compare Expedia and Genius program, the Expedia program is actually funded by Expedia itself. So it's a very chunky cost against gross margin. Whereas the Genius program, similar to our own program, is actually a promotional discount that is paid for by our partners. And the last point I would make is the important thing with any rewards program is to be able to do an A/B test to check that it actually is generating incremental value, which is something we test ourselves. And I can say that we're very comfortable that the setup that we have incentivizes the behavior that we want and also generates quite a significant value. The next question, please.
Yeah, thank you, Gary. I'm going to bundle a number of comments that we've received, which are generally in the area of describing and sharing a little bit more color around the competitive landscape and who else we feel that we operate against. You might just share some comments on that, guys.
Yeah. So the question was actually even more pointed than that, which is, are you gaining or losing share versus Booking.com? So I think the history of the company as it went, let's say 2014 to 2016, when Booking entered the sector, it went from a market dominant position and it started losing share versus Booking.com. When I was asked to take over the company in late 2018, we laid out a program of sort of core platform improvements over 2019, 2020 that we've executed against. And I also said that to investors back at tail end of 2018 at the Capital Markets Day then, that we would formulate a growth strategy for the company, based on these two observations. One, vast majority of people go hosteling to meet other people. And two, when they go hosteling, it's not the only thing they do. They go volunteering, they do short adventure tours, they're looking for workstay experiences. What you will see over the 2 years of COVID is that we've done a tremendous amount to make our core platform far more competitive. We did a lot of testing in second half last year around the different feature combinations to come up with that base infrastructure. We're starting to see the traction even against those V0.1 features. And if you look at the accelerated growth patterns since week 1 this year, whilst I can't be 100% certain that we are taking share, I can be very confident that the level and the recovery that we're seeing, is really, really tremendous. Next question.
Yeah, thank you, Gary. Again, to try and cover as much ground as we can, I'm going to do a little bit of bundling here. And generally, there have been a lot of questions in the area of the rising cost of living and all of the news that we see day in, day out around inflation. Guys, you might share what your thoughts are on how this impacts our customer base and how we might see it impact trading.
Should I take that one, Caroline?
Yep, I can do, of course. Yeah, you cannot escape inflationary pressures and the news, the dominance that it has in news flow. We're not seeing it. I suppose the most immediate answer is that we're not seeing it yet in the numbers. There's a lot of pent up demand, as we said. Bed prices in hostels, they're low, and we feel that our customer cohort, they're not as attuned to inflationary pressures as other cohorts might be. They're generally more resilient. They have less major significant overheads, maybe as compared to older demographics. They don't have the same level of mortgage or debt. What they do have is, though, a willingness and an appetite to go and embrace life, and they will take on debt to cover the cost if they need to. And there's plenty of articles out there in terms of customers in our age demographic being surveyed around, what is it that they want to do, how do they feel about life, demographic of kind of our appetite for debt and appetite to see the world. The other thing as well, we also know from previous patterns is that our businesses continue to acquire new customers. We have somewhat many data points going back over the years that we can go through the data, look at the trends on it, and reading the data. What does it tell us? It's, in terms of crisis, we haven't seen our customer acquisition rate dip. Our customer lifetime value is also holding up. So they're a pretty resilient bunch. They and we get the same repeat patterns year on year, which makes us feel confident that even in a time of recession or inflation, the demand for travel will still be there. That cohort, that age demographic, they are more resilient, and they will go and they will take the trip. And I think that the cost of the trip as well is another thing. It's affordable for them. I don't know, Gary, if you want to add anything that we're seeing on the supply side or anything further to add to it.
No, I think that's perfect. I'm just conscious that we have a few more questions, which is good.
Yeah, thank you, guys. And if it's okay with everyone on the line, we will remain on the line for a few minutes. I think it's a little bit past the guided 45 minutes at this stage, but there are a number of questions and clearly a lot of interest out there, and we'll try and do our best to provide as much insight and colour to those and respond as we can. So we'll stay on the line and continue with questions. Guys, the next question we have is around another very topical issue that we can't escape from the news, and that is around the availability of good talent and staffing issues that perhaps we're experiencing or that are potentially even impacting our hostels as well. So you might share some comments on that.
So like absolutely everything else in our business, we measure everything. And one of the things I look at very closely is hiring rates and attrition rates. What we've seen in the first quarter now versus 2020 and 2021, which obviously were COVID years, hiring rates are in excess of attrition rates. So even though we went from, I'm going to say 320, 330 people in 2019, and now we're around the 230 level, we are running just a little bit light in some critical areas. But what we are able to do, because we're trying to do something that's incredibly fun, incredibly exciting. Nobody's tried fusing a social network with an OTA before. It's a very young company that's very, very flat. So when people join us, they know they're going to be working on stuff that's really exciting. They're also not going to be a small cog in a big wheel. It's very much a big cog in a big wheel. And consequently, although there is a bit of salary inflation, and that's to be expected, from a retention and attrition basis, we're actually in net growth mode. David.
Yeah, thank you, Gary. We probably have time to squeeze in two more questions, I think. So we'll go with the first of those. And that question is a supply side question around how hostel churn and the hostel base has developed, particularly over the last number of years and last few years and as we come out of the pandemic.
Sorry, David, could you repeat the question for me? I just had my
Yeah, no problem, Gary.
sound dropped for a second.
No problem at all. No, this question is a supply side question around how hostel churn and hostel base has developed, particularly over the last couple of years.
Okay, I'm going to answer this super quickly because I know there's a couple of other questions that I think will be great for us to cover off. So, numbers. End of 2019, pre-COVID, we had about 17,700 hostels on our platform. 2 years later, that's only reduced by a net 5 to 6%. So we now have a bit over 16,500 hostels on our platform. That's a net reduction. What we actually saw was probably a 12% reduction, but we signed up new hostels that were new to our platform over the 2 years to make it net 6. So although it's been a really terrible time for the industry, there were lots of hostels that shut up shop for 3 to 6 months. Many of them own their own buildings, so they don't have lease costs. So it was possible for them to mothball their businesses. But overall, the hostel supply side has proven to be very resilient.
If I may, just very quickly to add in, just for people on the call that may not be aware, in our prelims presentation that we released to the market at the start of this year, there's a good slide in that presentation that actually sets out the half-yearly and quarterly views around the hostel inventory. So it's just a good one to kind of look at to see how it has been impacted and the level of churn, which and for the numbers that you've talked to, Gary.
Great, thanks, Caroline. Thanks, Gary. A somewhat related follow-up question is regarding if we have any plans to sell priority listing displays to our hostel partners, similar to Booking.com, as a means to supplement margin.
So that's a big resounding no, but I want to explain why. So originally in 2019, our base margin was still about 15%, and the blended margin that includes products like priority listing took it up to 16.6. And what you realize is, whilst that gives you a short-term revenue boost, what it does mean is it allows some hostels to be able to push themselves to the top of the sort, even though they have poor review scores. So during 2020, we disabled that product completely. So now our sort order, if you go onto other competitor OTA sites, you'll see a little like a little note which sort of says commission affects a property's listing in our sort order, something of that type. We have none of that. So the only way that you can get to the top of the sort on our particular platform is you have to have a very competitive price relative to other hostels on the platform, and you have to have the best review scores. Right? It's a very, very pure sort order, which really in the long term guarantees that our customers are getting the absolute best 5 results for them.
Thanks, Gary. We'll just cover our last question off now, and then we'll hand back to Investor Meets Company to close out the call. Thank you, everybody, again for your questions, and I hope you found the answers illuminating. Guys, the last question is just for us to share some comments or insight around the impact that the conflict and war in Ukraine may have had on our business.
So I would say historically, Ukraine and Eastern Europe in general has been a very small proportion of our bookings from a destination perspective. So on a comparables perspective, when you look at 2019 versus this year, it's very, very, very small impact, if any at all. And indeed, we have taken all of the hostels that are based in Russia and Belarus off our platform, similar to many other travel companies. I think the only risk that we have talked about when we did our preliminary results presentation a couple of months back is if fuel price inflation started to really filter through, that would jack up flight prices, which would then choke off demand. Having said that, it's not what we've seen. If you look at weeks 1 to 18, there has been, travel is accelerating. Our customer base, at least, is accelerating in terms of their bookings. So there's been no discernible impact whatsoever at this stage.
Yeah, and just to quantify the net revenue impact of Russia and the Ukraine, it's 0.01% of our net revenue, so immaterial from that perspective. And we've no operations in either of those regions, no people, so very negligible impact for us.
Thanks, Caroline. Thanks, Gary. That concludes the Q&A. So we'll now hand back to Investor
David, Gary, Caroline, that's great. And thank you very much indeed for taking the time to address all of those questions that came in from investors this afternoon. And of course, ladies and gentlemen, the company will review all of the questions submitted today and will publish those responses on the Investor Meet Company platform where it's appropriate to do so. And you'll be notified by email when they're ready for your review. Gary, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Thank you. I've actually just flipped back a couple of slides just to really summary and outlook. I think, as I said, we're very strong brand recognition after 22 years. That manifests itself in an incredibly loyal customer base. And obviously, we have all of those hostler relevant reviews to help new incremental hostlers find the best place to stay. It's a very asset-light, highly cash-generative business model. As you've seen from what we've been talking about, we have an extraordinarily differentiated growth strategy in place, which is really laser focused on the needs of the hosteling category. And from that perspective, when you look at the trajectory of what the P&L is going to look like, you should expect to see much higher gross market values, higher revenues, increases in paid spend. But that's very, very data driven to make sure we maximize new customer growth rates for highly valuable customers at prices that we are willing to afford. And of course, the piece that partially offsets and really drives that business model, of course, is having those social features in the app, which encourages more people to use the app, which brings down those direct margin, those paid marketing costs. We're encouraging start to 2022, looking at weeks 1 to 18. I'd encourage you to have a quick look at the presentation, after we've gone highly geared towards the recovery, and obviously look forward to seeing or speaking to some of you, I hope, in the next couple of trading updates over the next couple of months. So with that, on behalf of my team, I'll thank you very much.
That's great. That's great. Gary, Caroline, David, thank you very much indeed for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Hostelworld Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thank you.